Hey, what's up, guys? Justin here with ConfidentOptions.com. Hope you guys have had a fantastic weekend. Tonight is September 23rd, Sunday night. I hope you guys had a great week last week as well. We're headed into the final week of September, which is crazy, but that means fall is here or right around the corner at least, depending on where you live, which is one of my favorite times of the year and everything that comes with it. So excited about that. But let's jump into it. We had a very productive week last week. We had 10 trades, closing trades, I should say. While we're talking, I'll head over to the closing trade tab at the website. 10 closing trade, 8 wins, 1 loss, 1 scratch trade. We'll go through the 1 loss. One of our 8 winners, you can see the rest of the website, and then we'll go through the scratch. The scratch trade is actually a trade in EWZ, which I know a lot of you guys have been trading lately just because of the elevated IV. But we'll go through how we defended probably what would have been $1,000+ loser to scratch. And it just comes with patience and the ability to trade mechanically, and that's one of the reasons why we can break the zero-sum game. So hope you guys hang along with us here. I'll try to make this as quick as possible, but I want also to provide value for those of you that are learning to trade options and generate income that way. So we'll start at the bottom of our list for the closes from last week. The first close that we had was AAPL. It's a financial stock. We trade it quite often. If you guys are familiar with how we trade, we just basically look for high IV rank plays and enter strangles, straddles, call credit spreads, put credit spreads, and variations of strangles and straddles such as iron condors or jade lizards, things like that. But this was one of our strangle trades. No adjusting, no rolling needed. It came in nicely, hit our profit target. We took it off and we ran. So nice and easy trade there. This is one of our 2 earnings trades from last week. APOG, nice little small winner. Other earnings trade was GIS, which was an even smaller winner, but we'll take winners every day rather than scratch trades or losses for sure. These are the only 2 that actually fit our radar. September, there's not a ton of trading earnings going on, especially when you don't get the edge. And so these were the 2 this week that we had the edge. Maybe there'll be some this week, maybe not. I know when we get into October, we'll start looking at a lot more earnings trades, which is definitely one of our specialties here. So looking forward to that. All right, first trade we're actually going to dive into is this strangle in EWZ. As you can tell, we opened it on 720 and adjusted it twice, rolled it, adjusted it 3 more times, and rolled it again, and then finally closed it out for what was a 420 debit. But with all the credits that we collected along the way, that was pretty much break even. I think we made $1 a contract. So you can see, yeah, if you had traded 3 contracts, you made $3. Basically flat. You didn't pay for your commissions, but I take this every single day of the week as long as we're not having large losers. And so that's what we do to defend trades. We adjust and roll. So let's go through the mechanics of the trade. Pull up in the charts here. Sorry, but I'm going to open up my Epic Pen. I'm going to mark up the screen. This is the 1-year chart, 1-year daily chart of EWZ. And it's had a huge, just been getting crushed. Ever since the start of the year, it just kind of took a dive. Probably made a 2 standard deviation move here, probably a 1 standard deviation move here, probably pretty normal movement here. But this just kind of looked like it had no end in sight. And, you know, lo and behold, it kind of made a bottom here and made a V, which usually doesn't happen this sort of kind of bounce back that quick. But it is what it is. We started trading this position anyway right in here, so we'll zoom into this part of the chart. Get ourselves centered up to look at what we did. So I marked up the chart. Hopefully that's helpful. Seeing when and exactly when we adjusted and when we rolled the trade and when we closed the trade. And also you'll see here on my screen the IV. So the IV when we entered the trade wasn't super great, but it was elevated at the time. It was higher than most other plays. It was about 41%, which is pretty good considering all the other plays that basically had no IV at the time. And so we're going to start building positions, and this was just one of many positions that we built. We actually, if you look at the closed trades, we closed, I think, all of them from this time frame, and then the ones we entered at, the beginning of August, this past week, all of them were scratches or winners, which had a lot of premium in them. So really good week for us as far as closing out these EWZ trades. But let's jump through it here. So we entered the trade here on 720. by selling the 39.50 calls. So above this line, but we'll just draw it up here somewhere, 39.50 calls, and the 32. So nice wide range for us. Kind of let the stock do its thing. We were pretty actively managing this trade just because of the giant move it had made and then the move it made up. We just wanted to be on our toes as far as, you know, if we needed to adjust, we would. And so that's what we ended up doing. It popped up really quickly. We adjusted on this red day by moving up our puts from 32 to 33.50. So we moved them up about right here. So that's closing out of these, locking in the profit. We always adjust the untested side. So that allowed us to collect another about 19 cents in premium. So we opened the initial position over here for 69 cents, collected another 19 cents here. So we'll just add some of those things in here. And then at the end, we'll add them all up and show you how we got back to scratch. So the stock was kind of hanging out. It was doing its thing, but it started gapping, making a big move. It seemed really strong. It broke its high here. So, you know, without seeing this, obviously, we thought the momentum was going to continue higher. And so what we did was adjust again. So we took our puts and we moved them to from 33.50 to where they were there, just up $1. So $1 higher, not a huge adjustment. We're just slowly kind of creeping up as the market goes up. And this is the beauty of options. You can just kind of, you know, move around your calls and puts as you need to as the market moves around. Market kind of stayed where it was. It actually moved right back into exactly our original range. So if we would have kept on without any of these adjustments, we probably could have closed there for a nice win, 50+% win. But, you know, it is what it is. You can't predict a move like this. You can't predict a gap up and then it kind of stalling off like that. You just do, and you just take what the market gives you. And so in this case, we rolled the entire position. The 39.50 up here and the 34.50, we moved it out from August to September. And so what that did was allowed us to correct another credit. We were going to mark up our credits here. So another 21 bucks here. This roll allowed us to collect $85, 85 cents, looking at it that way. And so this roll allowed us to move out our contracts to the next expiration month, extending our duration, giving us more time to be right. Another key thing about options. And so the 39.50 and the 34.50 weren't available. And so we ended up taking the 40.35. So that kind of shifted our position up a little higher. So let me reset on the roll. And now we have the 35 and the 40, which is actually above our screen. So the problem now is that the stock has actually breached our short puts, right? Not to panic, though. We have a ton of credit built into this trade already, so we know that our actual break-even point is a little bit lower than this put. So we're doing okay. We're letting the stock do what it's going to do. So we get here on 8.5, or actually this is 8.15, excuse me, and we move our 40 calls down to 38 calls. So now, instead of moving our puts up, we're getting tested on the put side, so we're moving our calls down. Again, we're just kind of adjusting and moving as the market goes. So now we're down to the 38 calls. Close those out, lock in the gain. There's our new call. Collected another 20 cents on that adjustment. $20, looking at it by 100. Adjustment 4 occurred on 8/22, where we moved the 38 calls down to 35 calls. So now we have a straddle, right? So our calls and our puts are at 35. So we've adjusted. We haven't gone inverted yet. We have a ton of premium in the trade. We're probably up to $3 and some cents on this trade, making our break evens $3 out on the bottom side and $3 out on the top side. So we've got tons of credits. We just continue to add them up. And so that was another 30 bucks or 30 cents when you talk about buying options. Adjustment 5 that happened on the very next day was when we went inverted. So instead of staying where we were with the straddle, we went ahead and moved the call down again with this big red candle day, and we moved the call down to 34. So now we're inverted. And so when we say we're inverted, that means our calls are lower than our puts, and our inversion is $1. The $1 inversion means the smallest that the spread now can trade is for $1. But that's okay, because remember, we have more than $1 in premium. So we can actually still make money on the position if the position were to close in this range in between the two strikes come expiration or come whenever we close out the trade. That was our best case scenario at the time. So what we continued to do, since the stock continued to move lower when we got to here, we decided to roll out into a higher IV environment. So as IV continues to rise, we can continue to collect more premium. So this roll actually allowed us to collect a whole $1.56. $156. So remember, if we rolled back here, what our rollback here was for 85 cents. So the power of increased implied volatility increases the extrinsic value of those contracts, allowing us to collect more premium. So we're just tacking on another $1.56 to our overall break-even points that we have between the 35 put and the 34 call. So the stock continued to move. IV continued to stay high. We did not have an opportunity to take it off because IV was so high still. It hadn't contracted in. As soon as IV started contracting in, the stock made a move up where we needed it, closer to where we needed it to be. And we went ahead and closed out the position on this date here, which was the 19th, I believe. Something like that. 19th. 17th, 18th, 19th, or 20th, something like that. It's on the website, on the webpage to look at that. And so in the end, all the credits that we were able to collect ended up being about $4.21, and we were able to close out the spread for $4.20. Anytime we have this many rolls and adjustments, I'm really just looking to close out the trade. When it becomes break even or slightly profitable. I'm not looking to hit that 50% target in any way. I actually would have the next 3 days. It would have hit way under 50% target. It would have been nice just because of this crush in IV that's been occurring all the way from 100 down all the way to 70 from 100. So that was kind of the mechanics of what we did along the way. I hope that's helpful. Shows you how to be patient, stay in the trade, continue to take in credits. You just add all these suckers up at the end of the day, and you subtract that from the debit you paid to get your resulting profit, or loss, or break even. So in this case, we were break even. Super excited about that trade. I think it warrants a little bit deeper dive into the mechanics and the IV and why we continue to roll and why we continue to maintain. But we'll do a separate video kind of case studying that. I'm going to skip up a couple trades. You're welcome to go to the website and check out these for yourselves. I'll go up to the JD trade. We had a strangle in JD, opened it on 9/6, closed it on 9/19, held it for a total of 13 days. That includes weekends, and hit our just before our profit target, 50 cents. We opened it for about $1, so around that 50-cent level was where we wanted to take it off. And it ended up being a nice spinner, depending on your account size. Remember, it was a pretty cheap trade, so you could take up to 5 contracts on both sides for only $1,400 and make $235 on your money. The power of options. They're already leveraged, and so you don't have to use margin in your account. You actually can't use margin when it comes to options trading. So IV had been, I've just zoomed into the JD chart. IV had been elevated here when we entered the trade. It was all the way up to 79, which is perfect, exactly where we want it to be. Anywhere above this red line, 50, is kind of our target for us. And the stock, you can tell, did absolutely nothing. Yeah, it bopped down, bopped up, bopped down. But remember, we had a nice wide range on the stock. I mean, we had everything. We were going to let it do anything it wanted, all the way from the 31s down to the 24s, which is just barely on the screen here. So it was a nice wide range. We obviously thought about adjusting here by moving this side up, which would have been fine. We would have collected more premium. What typically happens, though, when you adjust like that, it resets your clock, and so you're typically inside or in the trade longer than you would be normally. And so we just let the IV continue to collapse as it did, and as it got down all the way to almost 57. And remember, we entered it at about 75. So good crush. Exactly what we want to see in these trades. Just simple mechanics when it comes to entering and exiting. Doesn't matter what the underlying is. Just get in, get out at your profit targets, and move on. Continue to go through. We're going to look at our loss here in XLV. We closed the trade due to dividend risk, and if you're not familiar with dividend risk, you're basically looking to, first you need to know what the dividend is, and your broker is required to tell you that there's an X dividend date coming. So not all the time. You'll get the emails a lot from your broker, whoever you used, Tastyworks, Thinkorswim. They let you know. I think they're probably required to. That doesn't mean you're going to get assigned. You have to do the calculation on your own. And so what you want to do is, if you're holding a in-the-money short call, as extrinsic value of the short call is less, if the extrinsic value of the short call is less than the dividend, you're at risk for assignment, because think about it. If you were the holder of the option, since we're selling the option, we're not the holder, we're just writing it. If you're the holder of the option, you're guaranteed the difference between the extrinsic value and the dividend amount. So you would exercise your option, and therefore you would get assigned as the in-the-money short call holder. That's a simple way to do it. We'll put something on the website here eventually that allows you to basically put in your ticker, put in the short call that you have, and it'll do the calculation to whether you're at risk or not. But really, as it's a simple calculation that you can do kind of back of the envelope just to make sure. And you're only at risk if it's the you hold the front month contracts. In this case, we didn't hold the front month contracts, but it was kind of in a gray area because the dividend was coming on Thursday before expiration Friday. And so I thought there may be some reach into the back month contracts, but who knows? I just rather play it safe than sorry and go through the assignment process and whatever. It's a small loss. It's not the end of the year count. Each position that you take is going to be small. You're going to have a loser, so you just deal with them and you move on. So let's go over to the charts. We opened this trade on 8/16. And XLV has just been on a run. I mean, just unstoppable. And this won't maintain forever. We'll eventually see it pull back. It always does. That's what happens here. There's no other options to look at here, but yeah, so it's going to happen. It's just a matter of time. So our technical indicators signal to us here when we enter this trade that it was overdue, overbought to the upside, and ready for either a stall or kind of a reversal. We didn't get that. We actually ended up adjusting by rolling out the trade on this date here. I think that roll was on 9/7. And we did pay a penny to roll. There's no way I would pay any more than a penny to roll on any stock. If you can't roll for a credit, don't do the roll. I sometimes will do that roll if it's either for nothing, for 0 credit or debit, or if it's for 1 penny, depending on the overall credit that you collected initially. We did collect 33 cents, which is exactly what you want to collect when you're doing a dollar-wide spread. You want to collect a third of the width of the strikes. So in this case, a third of $1 difference between the strikes is 33 cents. So we collected enough premium to go ahead and say, okay, I'll give up a penny to roll just in case, if we were able to get the pullback in the stock that we need. We didn't. We were at dividend risk, and so we went ahead and took off the position and closed it from there. I think we have 2 others of these working right now. We entered them later in the game, so we're just waiting for the pullback. Whenever it happens, we'll be opportunistic, take off the trades, take our money and run. If it doesn't happen, we'll continue to roll if we can do it for no debit or credit or a penny. If we can't roll for a credit, we'll close the positions and move on. We'll put our money to work somewhere else. So these trades have been really good to us. I think we're at about 85% win rate. If you're collecting a third of the width of the strikes, you're going to make money. That's just the way it is. So it's just a matter of lots of trades, keeping your position small, and continuing to trade. That's how it goes. So that was our closing trade of the week. We don't have a ton of closing trades that are losses if you guys have been with us for a while now. So it does happen, though, and it's part of the game. You deal with it and you move on, like I said. And after that, we had a winner in Apple. So, it's a good way to end the week with a winner, a closed winner anyway. And so, again, a quick recap. 10 closed trades, 8 wins, 1 loss. We went through that loss in XLV. And then we went through our scratch trade, which was our Ewz Strangle. With that, I'll close out the video. Hope you guys have a fantastic final week in September. Looking forward to seeing you at the website. Of course, always follow us on Instagram at confidentoptionstrading.com. If you have any questions, go to our homepage by clicking the logo at the top. And if you scroll down to the bottom of the page, there's a contact form. Just fill out your name and email and put a message in there, or question, or just saying you're in for when we release our new content, and we'll let you know. For now, that's it. Have a great evening, and we'll talk to you later.